I probably sound like a broken record when I say it was another record-setting day on Wall Street. In fact, all four of our major U.S. equity indices did hit new 52-week highs on an intraday basis, and we even had the S&P 500 and Dow Jones Industrial Average close at all-time highs. Lots of the bullishness today was created as a result of the U.S. and China signing phase one of the trade deal. So we'll take a look at how that affects our posture, if any. We'll then look at a trade application example of a stock that's been down the last couple of days that looks like it could be a very interesting long-term dividend investment. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 15th, 2020. First off, if you are new, welcome aboard. Remember to click subscribe on YouTube and go over to our description area to sign up for our email distribution list. We're also heavy users of Twitter. Feel free to follow me at Brandon Van Zee. And we appreciate those of you that click like and retweet on these Market Outlook related posts over on Twitter. Lastly, we have a presence on Facebook. You can follow us there at the web address embedded in the logo in front of you. All right, let's go ahead and jump into our charts. As you can see, I've got chart 4B pulled up here in front of us. And as a reminder, this is just a four grid here that will show us the four major U.S. equity indices. And you can see that all of them are trending in the right direction, at least if you're bullish, which hopefully by now most of you are. As you can see, the vast majority of the background colors of these charts are green. And remember, every single one of those candles has an opportunity to present a posture to each of us. And that's, of course, what David and I share with you on a daily basis when we're doing these videos. There's very rare moments like right here on the S&P 500 where we had a bearish posture for 2 days and then it was straight back to a bullish posture. So this is one of the more consistent 3-month runs I've ever seen from an intermediate posture perspective, where you have this entire chart here of 3 months with only basically 2 days of bearishness during the entire time period. So had you been using the market forecast technical indicator as your guide, at least from an intermediate perspective, you should have been bullish basically this entire run right here as we are setting new all-time highs here today. We closed up just enough today. We were up 0.19% on the S&P 500, so it wasn't any sort of a huge surge or anything like that, but it was enough to get us up and over the closing price on that candle back there a couple of sessions ago. So this is yet another all-time high here on Wall Street. And you can see that the high label is above the candle in all of our cases. And remember, we also have these labels embedded on our charts for our premium members that can signify not only 3-month highs, because remember, all these charts aren't only looking at 3 months here, but whether they're also hitting a yearly high. And so you can see that those green labels that say yearly high today are showing up on all four of our charts. You will notice that the Russell 2000 was actually the leading area here today. It continued its nice bounce off of that rising moving average from about 3 sessions ago, and it did have a yearly high. But remember that the Russell 2000 is the only one out of these four that still has more work to do to get to all-time highs. The small caps have been a bit of a laggard in recent years compared to the mega caps, so they still have a little bit of work there, but still promising signs even on the small cap front here today. The NASDAQ composite finished exactly flat, 0.00. You don't see that all that often. But anyway, it continues to have a bullish posture. But I wanted to point out one thing that is occurring here today that we don't see all that often, and that is a bullish intermediate confirmation signal. Now remember, the bullish intermediate confirmation signal is a two-part signal. The first part is whether you have a bullish posture. Now for that, you can just simply look at the background color of this chart. It's green, and therefore we know we have a bullish posture from an intermediate perspective. Part number two for that signal is determining whether the red line is in the lower reversal zone or not. That red line is the momentum line, and our labels here help us along nicely with that as well, because you can see right here in the label where it says momentum 18.22 and falling basically means that it is below 20, and therefore we do have a bullish intermediate confirmation signal on the NASDAQ. However, the signal would not be considered ideal. Sometimes you guys have heard David and I reference less ideal setups, and this would be considered one of them. there hasn't been an extreme exhale yet at this point, and so there's not a true dip that you're buying in this case. The blue line hasn't even come down and closed below 50 yet, and that's one of the things that we do want to see. We want to see a close on the blue line somewhere between 50 and 20 on the same day that we're getting bullish intermediate confirmation signal as a sign that it has given us enough of an exhale. Otherwise, sometimes there's a little bit more selling that may be involved in the future sessions. And we also want to make sure that the red momentum line is not at an extreme price like 5 or less. Well, right now at 18, it's fine. So anyway, just be aware of it. It's not an ideal setup, but nonetheless, just to make sure that you know when these signals exist, I'm just reporting it to you that we do have a bullish intermediate confirmation signal on the NASDAQ here today. So I guess the big takeaway is it's par for the course. New records in almost every area of the market, and things are humming right along. And of course, nice news there today with the United States and China kind of coming together and working towards fostering a stronger trade relationship going forward. All right, let's go ahead and now take a look at our next chart setup. In this case, we'll take a look at the 3 green arrows chart setup. This will be chart 4D. And here you can see that we still have 3 out of the 4 charts with the 3 green arrow status. The only holdover here at this point is the Russell 2000, but it is extremely close. I even mentioned this yesterday. I said if the market can stay strong for the next few sessions, we should anticipate that the Russell 2000 will join the other 3 with a 3 green arrow status, and that's almost a shoo-in as soon as tomorrow, assuming there's not a big drop in prices tomorrow. So when David helps you along with this video tomorrow, I would imagine that he'll tell you that the Russell 2000 has gone to a 3 green arrow status. Reason I say that is the only holdover in terms of the arrows right now that we're waiting for there is the MACD. And a lot of you are probably looking at this bar on the MACD. That's not actually the bar. The bar is right here. You can just barely see that it's almost at the 0 line. In fact, let me right click, maximize this chart so you can see it a little bit better. Here in this view, at least if you're looking at it on a bigger screen that's not your smartphone, you might be able to see that there is a tiny little gray bar right there where I'm circling with my mouse, and it's just barely below the 0 line. It's at minus 0.2294. So anyway, if we have another update tomorrow on the Russell 2000, there's almost a guarantee that the MACD will cross that 0 line and a green arrow will be produced, and this index will join the other 3 with a current 3 green arrow status, which is something that we use for trend trading purposes. Many of you are familiar with that at the old company that David and I used to work for, Invest Tools, and it is a philosophy that I still implement to a degree in my Monday top-down trend trading class for our premium members here at Market Scholars. So anyway, looks like we're on the up and up for the 3 green arrows status right now as well on most of these indices. All right, let's go ahead and take our conversation now on over to a sector 12 grid. I wanted to kind of talk about one thing that I found a little bit interesting with today's move. Of course, the market itself did hit a new all-time high today, and a lot of times people would assume that that was being led by the more aggressive and more cyclical areas of the market, but today that really wasn't the case. Today, the best performing sector was actually the utilities. Take a look at XLU down here. A lot of people have kind of fallen asleep and forgotten about the utilities lately, but my oh my, did they give you a little bit of a jolt here today. XLU was up 1.4%. You can see that that was strong enough to produce an overbought cluster signal. Now, as I've mentioned to you guys in the past, my research has suggested that the overbought cluster signals oftentimes lead to less reversion to the means on a percentage basis than the oversold cluster signals. So we have to be careful with this. It's just merely, I'm pointing it out. And remember, for those of you that are newer to this presentation, let me right click and maximize this. These little dots will show up on our charts when we get cluster signals. The red ones identify overbought cluster signals, and that occurs when the red line, the green line, and the blue line are all in the upper reversal zone above 80 on the same day. And then the opposite of that is also true. Over here, you'll see some green dots showing up, and those were occurring when all three of those colored lines were below the lower reversal zone, below 20. So the blue and the red and the green here you can see are all clustered up in that lower reversal zone. So the point that I was making a moment ago is I have found that these oversold cluster signals much more often lead to a reversion to the mean up than these overbought cluster signals lead to a reversion to the mean down. Now, they certainly can. I just want to make sure that you know, and I think most of you are aware of this, no technical analysis is ever 100%. We're trying our best to read the signs of the market, but sometimes the signs are going to be wrong, or they're conflicting with other signs that are more important, or what have you. So anyway, those of you that were brave enough to be buying the utilities over here in November when everybody was throwing them away, you had a heck of a run there, and not a lot of people have been talking about that, but that's actually been a pretty decent move there out of a very quiet area of the market, and some of that credit could have been given to the market forecast technical indicator for letting you know, hey, enough is enough. These things are oversold. Let's get into them. The other areas that are also considered a little bit quieter are staples. And you can see that staples were also a strong performer today. They were up 0.71%. I'm not talking about Staples, the company. I'm talking about the consumer staples sector here. It was up 0.7%, so a very strong day there as well. And not only that, but it was an important candle that allowed us to break through that prior horizontal resistance on these candles back here in the mid to late December time period on XLP. So a very strong showing there on staples as well, breaking to new multi-month highs. And then real estate also did well. Now, its chart doesn't look as strong as those other two that I mentioned. It's still got a lot of work to do to kind of get back up to these stronger areas over here. But nonetheless, there's some signs of a little bit of a reversal that's taking place there within some of the real estate area. In fact, let me kind of transition our thoughts now on over here to the internet briefly. And first off, thank you to those of you that clicked like on my video yesterday. We got up and over 100, so I'm a happy camper. Keep that up. Remember, if you get value out of these videos, it only takes 5 seconds to click like. Either do it directly below watching the video here on our website, or just simply going over to Twitter, and David and I will typically just pin the Market Outlook post that we most recently did to the top of our timeline, and you can like it over there. Or you can like it from the email that we send you if you're on our email distribution list, or directly on YouTube in the description area. We also have the link for that day's tweet. So there's 4 different places to make it nice and easy for you to do that. Whatever is your easiest one to accomplish, go ahead and go for that. But that is the best way for you to encourage David and I to do these videos every single day, if that's something you want. If you don't want it, then don't do anything. But obviously it takes time to do these videos, so we want to make sure that they are effective for you and that you're learning a few things along the way. I did teach my swing trading class earlier today as well, so for those of you that want to check out what our latest swing trade is in that class, we have 7 wins in a row in that class, so we're on a little bit of a hot streak right here. So we'll see if we can continue that or not, but that class is now posted to our Trading Rooms calendar for those of you that are premium members there. But over here on the internet, I also wanted to show you my factor selector tool that I use for my swing trading class. And one thing that I did notice, and we talked about earlier today in class, was low volatility stocks did pop off of the bottom there. And it's been a long time coming. You can see prior to this week, low volatility stocks here with this purple ball were basically dead last from a factor perspective for a full month. So they were really out of favor there. Now remember, the low volatility factor oftentimes is made up of things like utilities and REITs, and are quite interest rate sensitive in many ways as well. And so what we saw there today with utilities popping higher and consumer staples popping higher and even the REITs going a little bit higher, that's starting to make sense now why these factor rankings are shaking up the way that they are. Also, I wanted to point out momentum had a big jump on a week over week basis here. That's the green ball that you're looking at. I was mentioning to my class earlier today that this was effectively a tie. The difference between quality and momentum on my rankings this week was 0.002 So it's about as close as you can get. Momentum has had a heck of a run here lately, and it would be my expectation, as long as there's not some major disruption in the marketplace, that a week from today we'll probably be seeing momentum as the strongest factor within the market on this factor selector tool. So anyway, wanted to share that with you briefly as well. Let's go ahead and pop back on over here to the charts, and I wanted to bring up, just to support that commentary a little bit more, chart 3D, the factor 6 grid here in this particular case. And I wanted to show you that the momentum factor, which is in this case the chart in the upper right, really has had quite the surge here in the last week or so. You can see that out of all 6 of these factors, this is the one that's doing the best on a 1-month basis. So each one of these 6 charts is one month in length, though. So it doesn't go back a whole long time, but it does give us a sense of, where some rotations could be taking place. And so the momentum factor combined together, so I'm using 4 different momentum funds to establish that, are basically up just a hair under 4% in the last month. So a really strong performance there. Whereas we've seen a little bit of sputtering in some of the other areas. Notice that value, which is the one in the lower right-hand corner down here, is only up 0.6% over the last month, and is one of the rare factors that's actually down year to date. You can see that it would have closed just a little bit above where we're trading today, right here where I'm circling, the day before the new year. And so the value factor is still up on a month-over-month basis by 0.6%, but it's actually down just a hair on a year-to-date basis. And you probably aren't going to see a whole lot of areas of the market that can make that claim. This has been a very robust market, a market that continually sets new record highs. So to have a huge area like value kind of sit it out is a little bit strange there. But nonetheless, if you want animal spirits alive and well, you would prefer to see the momentum factor doing as well as it has, and value sitting on the sidelines a little bit there, because that's where you have more of your exciting stocks, the small software companies and things like that from the momentum space in more times than not. You can also see that low volatility has had a nice surge here as well, and that one continues to impress. My rankings on that factor selector, by the way, are as of last night's close, so that would not have included today's big surge in the utilities and the REITs and the consumer staples. So it's entirely possible that the low volatility factor will improve maybe another ranking or 2 by the time I put it together next week. So we'll wait on that, but anyway, just wanted to keep you guys up to speed here during this video as well about some of those things that I'm recognizing in our premium classes that we teach here at Market Scholars. All right, let's go ahead and take a look at a few more 12 grids now. Let's go on over here and take a peek here at commodities 12 grid. This will be chart 5K. So as you can see, there's a mixed bag here depending upon what types of commodities you're looking at. Today, one of the focus points from a news headline perspective was actually the soft commodities. Agricultural commodities were in the news because of the trade deal with China. And you can see here that sugar has really been taking off here recently, down on the bottom rung. You can also see that cocoa has taken off. In fact, cocoa is up and over a prior high point here that was set way back in the middle of November. So cocoa has been going straight up here. And corn did actually pull back a little bit here today. So we'll have to keep our eye on that. But it does continue to trade above a rising moving average in that case. Coffee has been in a strong downtrend here, and also has not only a pink background color signifying a bearish posture, but we also now have a red moving average here signifying price below a falling moving average. Another thing that is worth pointing out is that the energy space has struggled yet again. Seems like we've said that more times than not in recent years, but that top rung there will kind of identify some of those trends within the energy space. Oil is the one that's on the second to the left up there at the top, this one that I'm kind of circling right here. We're using USO as our proxy here. Of course, you have the ability to type in /CL if you want to see the futures contracts. But anyway, you can see that we've really struggled here in the last, let's call it 2 weeks on USO, where it's been down nearly every single day. And that was after actually rising pretty nicely. I mean, there was some optimism around oil going into that. So all of a sudden, it looks like it's kind of a broken chart. And you can see that we have a strongly bearish posture on oil right now. You can also see that natural gas continues to be in the house of pain. Oil was actually looking promising. UNG, or natural gas, had continued to be pretty pathetic during this last 3-month period here. As you can see with this chart, it's been largely going lower. There really wasn't any bullish time during this chart. So this is more par for the course, whereas oil is more of a reversal type of a situation. And then that leads us over here to gasoline as well. Gasoline now trading below its moving average there and has a bearish posture. So it seems like kind of the more soft commodities are the place to be right now. The places you probably want to avoid are going to be your oil and gas and energy related areas. All right, let's go ahead and take a peek now at another chart. In this case, we're going to take a look at the market segments 12 grid, and this is chart 5.0. All right, so as we pull this up, boy, everything looks pretty peachy here. Everything's green and trending from the lower left to the upper right. And I suppose that makes sense. The stock market is on fire. It is one of the best bull markets we've ever seen. And mentioned that last night's video that ticker symbol Earth is hitting new highs. In other words, stocks across the globe are record breaking when you combine them all together. So I suppose it should make sense that no matter what little area of the market your focus is, that you're doing reasonably well. Now, there, of course, are going to be areas that are doing better than others. And one way to kind of identify that using this chart 5.0 is twofold. First off, you can look at the intermediate label up here. And then secondly, look at this number off to the right-hand side of the chart, which will identify from a percentage perspective how much that particular security is up over the life of that chart, which in this case, all of these charts are 3 months in length. So as you can see here, some of the areas that have done well, at least those that are in kind of double-digit territory, are growth. So this is SPYG. So these are growth stocks. Remember, growth stocks are different than momentum stocks. Sometimes people don't really understand that, but they are different. Growth stocks are oftentimes companies that either have extremely high PE ratios or don't even make any earnings at all. And the promise of the future is greater than whatever they've accomplished in the past is kind of the mindset there. So think of a lot of your internet darlings and other companies that are maybe newer to the marketplace as opposed to your old school and mature blue chip types of companies. So growth happens to be an area that's working right now. Its intermediate line is up here at 96.63, and remember that can only get to 100. So that just goes to show how close you are to being one of the stronger areas out there. 96.63, and it's up just over 10% over the last 3 months. Look at that chart right there. That is consistency at its best. Now, right next door to it here to the right is growth at a reasonable price. Some of you might recognize the acronym GARP there. And so GARP is growth at a reasonable price. And you can see here, that is also a strong area of the market. You could probably throw a stock like Microsoft in there as growth at a reasonable price. So it's not necessarily the newest companies to the market that have really tiny PE ratios or I'm sorry, really tiny profits. These would be more companies that might have a PE ratio of, let's say, 30 times earnings, but they're still growing at about a 30 times clip as well from a profitability perspective. So you can see here that SPGP is up 11% over the last 3 months, and its intermediate line is at 94.89 and rising. So that's another one that you can add to kind of your hottest category area. Now, directly below those two will be high beta, which high beta, I would say, oftentimes does have a lot of overlapping characteristics with growth stocks. You can see high beta is doing really well. It's at the intermediate line of 95, and you can see that its price performance over the last 3 months is at 13%. So that's actually the best performer out of this group of 12 that we're looking at here. And then last but not least, we have high quality, which is right to the right here. And that kind of jives with what we were showing you just a moment ago on the factor selector tool, where high quality was ranked first on this week's ranking, just barely edging out momentum. Anyway, you can see high quality has an intermediate reading right now of nearly 97, and it's up about 10 or 11% over the last 3 months. So anyway, if you're looking for additional areas through the ETF world to kind of tap into this market's growth that we've seen recently, maybe some of those ticker symbols there would be of use for you. All right, let's go ahead and now get into our trade application example for the day. And for that, I wanted to actually take a different step. Instead of talking about all this growth and momentum, I want to talk about a stock that's basically in the doghouse, has been forgotten about, and is likely considered quite controversial to many of you. So I will forewarn you here before I go into my analysis on this one that many of you probably will not like this. So ticker symbol is WFC. Many of you are aware that is Wells Fargo. So I am somebody who is a dividend growth investor personally. Many of you know me for that. Some of you know that I used to be the host of the Dividend Depot podcast, and many of you that have been my students over time know that I really love dividend stocks. So anyway, we have this chart here that we use at Market Scholars for my dividend growth investing class. This is chart 2A for those of you that are premium members that have access to these charts. And this is what sometimes you'll hear me refer to as the dividend stair-step chart. And what we're hoping to accomplish here is buy high quality companies on the cheap. Now, step one is identifying high quality companies, and that's where many of you might disagree that Wells Fargo should be discussed as a high quality company. Obviously, they've gone through quite the controversy here in the last several years. And they were once kind of known as the bee's knees in the banking industry, but then scandal erupted, and now they're kind of looked at as a bit of a joke in the banking industry. Well, they did report earnings yesterday. Wall Street didn't like what they saw, and the stock has been down the last 2 days as a result. So, as I look at this chart, one thing that immediately catches my eye is the fact that the stock is now trading right here at this blue line. That blue line is what we use to try to determine if the sell-off has been extreme enough to create a yield big enough to attract our attention. And these dividend stair-step lines are going to be different for every single company that you pull up on these charts because they're all using a company's historical yield ranges to establish those extreme zones. And so as it stands right now, Wells Fargo touched that blue line here earlier today, making it worthy of a conversation of buying for the long term for those of you that do consider it to be high quality. If you don't consider it to be high quality, obviously do not buy it for the long term because you have to believe in the companies that you put in your long-term portfolio, since we don't use stop losses or anything else like that. So Wells Fargo, just to button that up a little bit, you can see here has an average high yield of 4.24%. And that's where that blue line zone is. And this other label up here at the top that says average high yield price says 48.11, and that tells us at what price should we consider purchasing this company if we believe that its future prospects are better than what it has been going through here more recently. As you can see, this stock has largely tracked sideways for the last 5 years or so as it's been trying to get through this controversy. But in many of those months and years along the way, it has not had a yield nearly as high as this. Most of you are aware that the yield on the S&P 500 is less than 2% right now. So Wells Fargo, even all of the fleas that it has on it right now, is interesting as a candidate if you believe it to be a blue chip company because its yield is more than twice what the market itself is offering. So while I know that this is a presentation here with these market outlook videos that caters to those of you that are more active with your portfolios, which is why David and I will do a lot more options trading and swing trading and things like that here, I just can't shake the long-term investor out of me entirely. So every so often I will bring up these longer term opportunities, and we've done a few of them along the way, and more times than not, when we buy stocks that are high quality in nature, that have pulled back in price, we tend to do reasonably well. Now, obviously, we've had a bull market to help us along, but stocks that we've done like that in the past are, Altria, MO, Microsoft. Microsoft we bought a number of years ago, but really hit a home run on that one, up about 30 grand on that position. So the point is, these positions we have been putting on over time sparingly when opportunity arises, and I do wonder if right now may very well be one of those times that is arising as an opportunity for Wells Fargo if we are to look towards the future and not at the most recent past. So with Wells Fargo trading at only about 1.2 times book value, and also having a new CEO installed from Visa here more recently, perhaps there's reason to believe that the future will be brighter than the past. So for those of you that were looking for a reason or an excuse to purchase Wells Fargo, perhaps it touching this blue line is just that reason. But again, this is not a trade that you're going to be in for the next couple of months. This is an investment that you're going to be in for the next decade type of a mindset here, okay? So we're going to go ahead and just simply buy 200 shares of Wells Fargo. I'm going to click on the ask price. I'm going to come down below here. Just buy 200 shares, and I am going to change this to 48.11, which was that price that we saw on the chart there. It was actually trading down there earlier today, so it's one of those days where I wish I would have been able to get filled in the middle of the day instead of waiting until the end, because it did have a little bit of a rise at the end, but nonetheless, we'll put it in there at 48.11 in order to practice that DGI philosophy a little bit better there, and that's what the chart says is 48.11, so that's what we'll put in our order at, and we will change that to a good till cancel order just in case it doesn't get filled tomorrow. We'll be happy to take ownership of that at some other day in the future at that price. So confirm and send. Simple stock trade here. No stop losses or target prices or anything like that. We're just saying this is a business that we want to be the owners of for the long term, and now is a cheap time to be getting involved with this particular security. So we'll go ahead and send that off and see if we can get filled here in the coming sessions. All right, well, thank you for joining me here yet again today. Another record-setting day on Wall Street. Trends remain bullish. For the most part, there's a lot of activity out there to the upside. There's a couple of exceptions to that. The energy stocks and oil and gas commodities are an area you probably want to avoid right now. But otherwise, we have a very strong market on our hands here. So I want to thank you for joining me here tonight. If you got value out of this video, make sure you go over to Twitter and click like for us, and then David should be back with you tomorrow. Until next time, best of success with your trades and your investments. Goodbye for now.